Sappi is a global producer of fine paper and chemical cellulose.
Right, and as Wayne indicated, Eugene Finas, the CEO, back about 15 or 20 years ago, made the decision to go global. They bought Scott Paper in the United States, and then they bought assets in Europe, positioning themselves as a global leader in glossy, wood-free coated paper. So that's the stuff they use to print your Vogue magazine, as well as like annual reports and, all the glossy paper.
And as Wayne says, it wasn't the right product choice.
It was exactly the wrong thing to do, because they didn't realize the effect of the internet and on magazine sales. 20 years ago, you had 5 magazines that dominated distribution. Now you've got 500 magazines, so everything's niched, but the actual volumes are down significantly. And Sappi made a huge strategic error. They went to the UK, they had to close all of those plants for environmental issues. They went to the US, as Paul said, they went to Europe. And then in Europe, as the market was going down and the volumes were deteriorating, they decided to buy a massive competitor and just close it down.
I want to give the market cap here.
It bankrupted the company.
38.4 billion rand in terms of market cap, price to earnings ratio of 9.9, and there's no dividend yield, which obviously gives an indication of where the company finds itself right now.
Admittedly, they have sorted themselves out in the last 3 to 5 years. They've gone into chemical cellulose here in South Africa. That's now 20% of their business, which is quite good. And they've slashed their plants and rationalized their plants and closed capacity and everything, because there is a perpetual decline in the demand for glossy. So they have taken the corrective steps. Now, when you look at the share price graph, it'll probably only show you the last 3 years. It actually looks good.
Well, there we go. It's up on the screen at your
request. It just ignores the previous 5 or 6 years.
Yeah, so it's trading at around 70 rands a share, but it was at 130 in 2007.
Yeah.
So, and it was probably at this level 20 years ago. So it hasn't really made
it has effectively halved.
Oh, yeah. And
but to be fair to them, they, as Wayne said, they decided they weren't going to be cannibalized by their competitors. So they went and bought things like Emerald in Europe, and they basically shut it down. So they were the consolidator. And so whatever pricing power there was,
buying it and then shutting it down.
And what also happened to them, where they got massively lucky? They were on the verge, as Wayne said, of going under, at which point the appetite for high yield corporate paper in Europe improved to the extent that they were able to reissue debt and basically trade themselves out of
but they still had to do a huge rights issue at the time. I think the biggest discount I've ever heard, I think it was 75% discount on the share price.
So you basically had to.
Well, the question is it ever going to go back to 130, or is there a new game out there for Sappi?
I'm not positive on this. It's very similar to fixed line telecom. You're in a perpetually declining market. Now, you can shut capacity and you can shut capacity and you can shut capacity, but that's not a growth industry. It's just simply the chemical cellulose part of the business is doing well, and I wouldn't be surprised at some stage if they spin that out, because there's big value unlock, because this is actually a very good business.
Yeah, because it's interesting. In the results, they spent a lot of time talking about that, because they're trying to detract your attention away from the coated wood-free. Look, they've also got a business in board, and they've also got a business in A4 paper.
They're reasonably diversified.
Nice assets here, but it's mostly Europe. It's quite a big North American business. The chemical cellulose, remember what that is used for is like yacht fibers, and it goes into rayon.
How big is that in the overall stable?
Oh no, that's big. It's
15-20% rising
and going up, and that's where they've spent all the capex. It goes into cosmetics. It's like cornstarch. It's used everywhere. And this is a very, very good industry, and they're doing it in a low-cost base, which is South Africa.
But it's not enough to give this the hot.
I don't think so. No, I'll go not hot here.
Yeah, I'm afraid so. Like, we've been calling it not hot for about 5 years on this show, but unfortunately, it's done well. But I'm still not hot on it. Is what I'm trying to say.
Well, there we go.